What's up, guys? It's Apurva again. I have my good longtime friend Shahin Naghavi with me today. Good to see you, brother.
Yeah, man. Thank you.
We are going to talk about Shahin's got a plethora of businesses surrounding real estate and even other operational businesses, but we're going to talk about kind of his real estate investing journey today. Both of us can not stop talking, so we're going to control ourselves in terms of the content today. But let's just kind of take it from the top, man. Like, give me your background. Where are you from? How'd you get here? What's been going on? How did you get into real estate, period? Like, from the very first time you saw a set of keys. Like, walk me through it.
Yeah, first off, thanks for having me. Absolutely love this. Any chance I get to hang out with you is freaking awesome, because the juices start flowing and I start thinking like, okay, what can I do with my life better?
You're not getting paid.
How do I get more efficient in my life? No, it's true. Look, there's a few people that you surround yourself with, and it's like the ultimate high, the natural hack. Like, you know, we sit here and listen to podcasts or watch videos or whatever, and it's like we don't need the inspiration. A lot of times you have that just in front of you, and we just don't maximize it because of a million different things in your life. But yeah, look, my journey is a very immigrant story journey. My parents are immigrants. I'm a first generation American. Very blessed to have the opportunity to be born in the US and have the opportunities here. And just growing up, seeing both my parents, especially my father, grinding on a daily basis to make it work and to give us the best opportunities possible, just kind of set the framework and benchmark. This is someone who came to America with $300 and barely any English, and this is what he's accomplished. Cool. Well, I need to definitely, supersede that as much as I possibly can. And on the entrepreneurial side, having immigrant parents, entrepreneurial side of a business is just there. Like, you have to figure out a way to make it work. So real estate came to me through that. I remember being a young kid driving around with my dad, and he would drive around, look at different real estate, and he would buy one piece of land with all the money that he could save, and then he would sell that and then buy two, and then buy 2 to 3 and 4, and he built, from what he knew, he built what he could. And so I'm very, very blessed because I've got that benchmark. I've got that framework that a lot of people don't have. And so my success is directly correlated to the amount of influence I had from my family, especially my father.
That's awesome. So, like, and much like, we're all very blessed, like, underscore, highlight, bold, right?
Yeah.
Very blessed to have that kind of access and exposure as we were growing up. So, like, walk me through, so you kind of, you were around it, much like my background, around real estate, kind of growing up, picking up rent with pops, like all that kind of stuff, right? And so walk me through kind of where you leveled up, I'm assuming after college, we'll start with kind of Madison Fine Properties as your brokerage.
Yep.
Riverside Equity Partners is kind of the family real estate holdings business.
Yep.
And you got a fitness business, like we got all kinds of things going on. But we'll start with kind of Madison Fine Properties. That's kind of your baby.
Yes.
Right? Walk me through kind of how that evolved. Where did it come from?
I got my real estate license. My father and friends had always suggested, look, if you want to be in real estate, get your license. And it actually took me a long time to get it. I just kept on pushing it off and not thinking it was going to be my path. Growing up in Texas, attending Texas A&M, doing an industrial engineering degree, you're going to oil and gas.
Right.
And I thought, maybe that's where I need to go, and that's where the money is. Especially when I graduated from university, the general market and economy was great, and a couple years later, it just bottomed out.
Right.
So I finally got my license and didn't ever join a team, didn't ever join a company, just kind of hung my license with basically like a flat fee, essentially. Never had any kind of mentorship and really learned the process through a lot of errors. So I feel bad for a lot of the clients I helped initially when I first got into the business, because I had a lot of poor mentorship or no mentorship, really. Yep. But I always gave it my all. And really, I went through a zigzag growth. So it was go here, try this, that didn't work, go back to start. Okay, try this. Oh, that worked. Okay, now where does that go? And so it was a zigzag start for me. And up until recently, now it's significantly more efficient. I now understand the true value of having the proper mentors, plural, multiple mentors, and then also having the path kind of driven out for you or drawn out for you. But yeah, I started Madison Fine Properties because it was my goal to grow. I figured I'm always in the mentality of, okay, if I do one thing, how do I scale it as fast as possible?
Right.
Right? And if I'm going to spend my time doing this, how can I maximize the time? So the second I tasted success with it, it was like, okay, let me scale this up as fast as I can. And so I came up with Madison Fine Properties. I felt like it was a name that a lot of people felt comfortable with.
Yeah, that's great.
Versus Shahin Realty or Naghavi Realty.
Right.
And just kind of grew from there.
So I'm going to I'm going to lob you a counterpoint. So do you think, specifically to real estate investing, a real estate license is necessary?
No, it's not necessary.
Because you've kind of converged both worlds.
Yes.
Right? But
definitely not necessary, but it's the education aspect of it, and in my education, I'm not taking the license, not getting your license, but just being around and understanding from A to Z the whole process, and knowing the various different asset classes definitely helps.
Yeah, because I think, what I see, and I can see both sides, right? If you want to get exposed to kind of just the fundamentals of real estate transacting, right? A license adds a ton of value, right? But majority of the value you get, or like the real active day-to-day of having a license, is around real estate sales, right?
Yeah.
And transacting in that way. And so I think that one of the first things people think is like, hey, I want to get into real estate investing, let me go get my license.
Yeah.
Right? And I think that's a little bit of a misconception.
Yeah.
Right? Because it's like, wait, like maybe if you just want to be a real estate investor, then you work with great brokers that do that, right? And worry about that side of it. And I would argue, like, maybe even a little bit of a distraction, right? If you want to build a sizable real estate portfolio, like real estate sales really doesn't do anything for you.
No.
Right?
Yeah.
But anyway, so like I was just curious, like, because we're going to talk a lot about real estate investing. So let's kind of like, that's a perfect kind of.
But you're right. So to give you an example, I buy deals that I'm not even brokering myself.
Correct.
Right. I'm not even getting a commission on the other side of it. There's a really good opportunity that gets presented to me. I'm like, great. Like, it. Thanks for presenting the opportunity. Let's get it done.
Yeah, absolutely. Like, we have a real estate team. We have a real estate license. I have a real estate license. Most of my transactions have been through other brokers. Yeah. Like, I don't self-source a lot of stuff.
Yeah.
It's nice to have the keys to the kingdom, kind of poke around in the MLS and CoStar and all these stuff. But like, I'm not really, that's not the end game here. But so perfect kind of segue, Riverside Equity Partners, right? Family holding company.
Yep.
You kind of manage, I'm assuming, the day-to-day these days.
Yes.
Asset manager, whatever you want to call it. Walk me through what that portfolio is, because you got a big mix of property.
Yeah, we do. We've got quite a bit of industrial flex type of assets. We have some land positions. We've got a little bit of retail, but not too much. And like we were talking previously, we've dipped our toes into the multifamily, and I'm starting to recognize it's not the best asset class for us, personally, for our goals.
Yep.
But mostly we tried to focus on assets that are challenging to be replaced. So maybe unicorn style assets and areas that are in growth mode. So we've done a really good job of identifying fringe neighborhoods that have growth potential. And our risk tolerance is pretty high. So we've got no problem going into areas that maybe no one else has been in yet and kind of establishing the growth path for that.
So walk me through today's funnel, because I mean, this has been built over a lifetime of family effort, right? But like, today, as you start to kind of continue to grow the portfolio, how are you guys kind of putting eyes on the ground? How are you kind of doing due diligence on neighborhoods? How are you figuring these things out to kind of have the foresight, like, hey, this is where we want to be, and this is the kind of asset that we want to, take a shot at?
A lot of it is, this is like my hack, and I don't tell a lot of people this, so if you're watching, like,
I'll bleep it out.
Yeah, bleep it out. No, take this and run with it, and I'm sure a lot of people do this, but I have a routine. Every morning and every night, when I wake up in bed and when I go to bed, when I'm on my phone, I'm not scrolling.
Not doom scrolling.
Yeah, I'm not scrolling like TikTok videos about how to make pancakes. Like, nothing against that, but
nothing against pancakes.
Yeah, I love pancakes. But what I do is I pull up our MLS locally and I search every property that's been listed in the last 24 hours.
Okay.
So you can go to days on market and put 0 to 1.
Yep.
Right? And I do that every morning and every evening on our MLS. And what that does for me is it tells me, okay, that's interesting. There's a lot of new listings that are coming up over here. Or now I'm starting to notice price changes. Or what's this area? If you do this twice a day, over a course of a year, 5 years, 10 years, you start seeing trends.
Yeah.
I have a better conscious of knowing of different areas that are growing because I start seeing the pattern, right? You start seeing some homes pop up over here and you start digging into it. I do the same exact thing for commercial. So I get onto like LoopNet, for example, which is a national MLS, I guess you could say, for commercial properties. Right. I do the same exact thing. And because I can see the residential right first and I see the commercial, the residential, as you know, residential roofs brings
Yeah.
Commercial.
Correct.
Right? So then I can start taking the information I'm gathering from the residential trends to say, oh, okay, there's a commercial warehouse over here or a retail center that's no one's really even poking around on yet. I might be able to capture this and seeing how fast homes are being built over here.
Yeah.
You know what? This might be a decent asset for me to purchase.
And so in the industrial, I know you're not anchored only by that, but like, it seems to be kind of a sizable piece of y'all's portfolio. What kind of tenant mix are you kind of doing? Are you repping that stuff like through the brokerage?
Yeah.
How are you filling these things? Because they're amazing asset class, probably arguably the hottest right now, right? Especially in Texas. However, a lot of risk in terms of vacancy because sometimes it's just kind of like you just need that right tenant to kind of show up. That once you get them, long-term leases, triple nets, right? So you're not probably low maintenance from a landlord standpoint. Walk me through kind of
I think for me it's like pretty easy. I'm not looking at large scale industrial typically, like large spaces. I'm not looking for 30,000, 50,000 square foot spaces unless I see the land play there in the long run.
Right.
I found that a lot of people just need 2,500 square feet.
Yep.
And it could be to do a gym in there. It could be they're making candles to sell or soap or whatever it is. The entrepreneurial mindset. It's easier to infill. Now the 2,500 square foot, plus or minus, is attractive because it's a certain amount. And what happens is a lot of entrepreneurs, especially starting out, they don't need a huge space. And the reality is they have a certain budget.
Yep.
And so, okay, how can I fit their budget? So I'll get a phone call and it says, hey, I'm looking for warehouse space for my new business I'm starting. Great. What size do you need?
Yep.
I'm not really sure. Great. What's your budget?
Yeah.
And 9 times out of 10, the budget is somewhere between $2,000 to $3,000, right?
Got it.
And so that's the disposable income that they can push to that because their business can cover. So it's like, great, well, a $2,000 a month, I could get them a 1,800 square foot space or a 2,000 square foot space, and you just kind of plug and chug from there. And then we're also kind of seeing because of the internet, the magical internet and everything that goes associated with that is, you're seeing co-working type of spaces, you're seeing industrial co-working spaces.
Right.
You just have a lot more opportunity. And then with the COVID boom, COVID gave people a lot of opportunities to take a step back and say, you know what, I've had this passion project for a long time. I want to get that started. So maybe it's a brewery, maybe it's whatever. Those smaller spaces are easier to manage.
So you're definitely in your mind usually kind of less non-institutional tenancy.
Correct. Yeah,
right?
For sure.
Kind of the Main Street, mom and poppy type of tenants.
And the reason is we're typically going into areas that are growing.
Makes
that
sense.
haven't been stabilized yet.
Makes sense.
And it allows me to get in with value. Like I can get in there and increase the value with doing some minor cosmetics and honestly, some places don't even have a website, right, to market it. So stuff like that.
That makes sense. I love that. Tell me a little bit about kind of like how you're analyzing a deal. What are returns looking like for you guys? Like, I think for all of us, there's some sense of analysis paralysis, and especially in a growing market like Houston, where we are, there's opportunity everywhere, right? But, unfortunately, for some of us or most of us, there's not unlimited capital,
right,
where we have constraints, right? So like, hey, if I'm going to take $100K of my money, where am I putting it? What's the best use of capital? Like, where am I placing it to get the fastest and best return, right? And, sometimes, obviously it ebbs and flows with risk, right? You get way more return with higher risk, like placement, right? And you mentioned you have a higher risk appetite, which obviously is a strategy in itself.
Yes.
But tell me a little bit about kind of what that decision making looks like.
Yeah, I have a very, very high risk, which is the complete opposite of my wife, who doesn't have high risk. So it's probably why you balance out so well. But for me, I try to do a land play. So if I see an asset and I feel like in the next 5 years, the land by itself will be worth X.
Okay.
And I know that because I'm looking at MLS every morning,
Yep.
and I can see the trends, and I can see, well, this type of assets being built, these types of homes are being built in this neighborhood. And being sold, that means these price points are there. So I do this analysis in my head very, very quickly.
Yep.
Just through
That's the napkin math.
Yes, the
Everybody's
napkin
got
math.
a napkin math.
Yes.
In their head. Yep.
And actually, to a detriment, I do not have analysis paralysis.
Good.
I really kind of just pull the trigger when I see something. I pull it very, very quickly.
Love it. But that's an edge.
It's an edge, especially in the commercial real estate world, because there's a lot of analysis paralysis in the commercial real estate world. And I've captured assets because they've come in the market today, and by this
first mover advantage.
I send a contract immediately within 2 hours, 3 hours.
Love that.
And I capture it and I catch it. If I see the opportunity, if I know this asset cannot be replaced in 5, 10 years, I see the growth, boom, I'm gonna park my money there and then figure out a way to make it work.
And so like, I love this. Let's get a little tactical. You know, okay, identified an up and coming neighborhood. There's a, call it underutilized warehouse that's kind of sitting on a nice corner, right? That's probably some pedigree of, it sounds like what you're looking for, right?
Beautiful.
So if that's what we're doing, are you waiting for it to get on market? Are you trying to pursue off market?
No. I don't pursue off market, and maybe it's something I need to do. I just don't have the time capacity to do that or the infrastructure behind me to do that.
Got it.
Honestly, I see it pop up and I jump on it. Now, because through relationships, I do get a decent amount of deal flow that comes across my desk.
Pre-market or whatever.
Pre-market, because the brokers know that, hey, it's an area that I'm comfortable with.
And that's the commercial world. Like there's huge value in maintaining and establishing relationships with commercial brokers.
And a lot of commercial brokers know, hey, if I'm coming to this person, they know this deal, I know they can get it done. You know, it's the comfort.
I'm going to kind of just like unpack some of the advantages. First mover advantage.
For sure.
You don't waste time.
No.
I think having an established track record and relationships in the market ecosystem, that doesn't happen overnight for anybody,
for sure.
right? I'm going to add, it sounds like confidence in you're going to close.
Yes, for sure.
When a Shahin contract comes across, like, hey, maybe it's going to be an aggressive offer, you know, the Brown way, but hey, we're going to close. Right? And so that sounds like another piece of the puzzle is like, this is how deals get done because that broker knows me. They know we own XYZ assets, right? And all this stuff that you build over time, like, you know, I'm just kind of thinking of the frame of a new investor that wants to go on a similar journey. Like, yeah, this is not easy to just show up and start doing this stuff.
I mean, and that's where the value of, and where I even do this is, hey, like if you've got deals coming through and you need someone to participate with, like I've got an extra $50,000, let's say, for example, whatever the number is.
Right.
You know, hey, put me into it. You know, and I've got deals now where like relationships where someone will call or send me a text and say, hey, I'm buying this. Do you want in?
Yep.
And I'm like, yeah, put me in. Whatever the number is, just put me in. You know, and I don't even need to look at anything.
Yeah.
Right? The question is, how much money is it? What percent do I get? And when do you think, what's the exit strategy? That's the only 3 things I need to know.
So I'm going to touch on exit strategies in a second, but let's continue. So like I made this offer, I'm confident in it, maybe that all things are going good. How are you like tactically, or do you already got bankers on deck?
Oh, great
Are you
question.
guys cash buying? Like what's the deal?
I write all my offers cash.
Okay.
Whether I have the cash or not, it's a different story, right?
Fair.
But if it's a good deal, I can always go get the cash.
Okay.
Right?
So is that, and you know, is it an unfair advantage of family money? Is it friends and family network? Like walk me through that. Are you raising capital?
If I need to get cash and if I need to raise, at this stage in my life, it's easy to do.
Okay.
It's 2, 3 phone calls of relationships who reached out to me in the past or who know me or who have invested with me on different stuff. But more often than not, it's personal and more often than not, I'm writing the offer. Then I take it to 1 or 2 of my lender relationships. I'm like, I want to buy this. And the commercial world is very different than the residential world. On the lending perspective, a lot of it's relationship based. I mean, yeah, you have to have your financials there for the most part, but these lenders are these loan officers are going into a committee, like a table like this, and at the end of the day, they're saying, "Here's a deal. We know Shahin. He's never had a problem. We know his investments are awesome. We don't know how he does it, but they're good. We need to give him money." Right, and that's
80% of it's on the asset, 20% is on who the borrower is, right, or the sponsor is what
Honestly,
they call it, right?
Maybe even a different. I would say even maybe more on the borrower. Maybe it's even like 30 or 40% sometimes.
Okay.
But yeah, the asset has to, I guess, make sense. But my vision on what an asset makes sense is very, very different than what a banker.
That's a good point. The better relationship you have with your banker. Right, and I think all of us at this stage have a in our pocket 3 or 4 really strong relationships. And then maybe like a plethora of like a database of bankers. Right. But like I would completely agree. Like the better your relationship, now it's like, hey, we're lending Shahin's projects. Right. If you're early on, they're going to scrutinize that project a little heavily. You know, my point I was trying to make earlier is like, I think the project oftentimes, if it just stands on its own legs or if it's a great value deal and they're like, hey, we'd love to be funding this thing because it's got great cash flow in place, or we see the upside that you're doing, or you're a good executor of strategies, right? Whether it's repositioning or whatever the case may be. Okay, so you've got kind of made this offer. I'm just going to continue to walk through this thing. You've made this offer. You got your bankers. I'm going to talk about capital raising for a second. Let's unpack that because like that's not easy, right? Like,
you know what?
Today it's easy, but it wasn't easy that first deal.
No, correct. Right? But I'll tell you, and I think I've been in a couple of masterminds now, and they're really valuable. And you know, in the residential world, when I'm in a room like this with a bunch of residential real estate people who are in the residential sales side who want to invest into a commercial deal, it's funny to me because commercial in my mind, it's to get a loan on a commercial is so much easier.
That's hands down
and no
easier.
one knows that.
That is very true.
It's so much easier to buy a commercial asset than it would be a residential. I'll never forget, I was trying to buy a house, and the most I could get qualified to purchase this home was $500,000.
Okay.
Which is a significant amount.
Yes,
okay?
absolutely.
In the meantime, this whole process is going on. I'm closing on a $3 million warehouse.
Yep. With very little friction.
With no friction.
Yeah.
Right? And so that was just so wild. It was like, I can get $3 million here. I could barely get approved for $500,000 here for residential.
Yep.
And so when you understand that and the fear of commercial goes away, it's a game changer, which is where if you're starting out, having mentors or investing with mentors and building those relationships go a long, long way.
So let's talk about those mentors for a second. Where did you find them? Where was your first ones? Take Pops aside.
Yeah, well,
he's an amazing mentor.
Yes,
right? I've met him. He's fantastic.
Yeah, you have a 5-minute phone call. 5-minute conversation with my father, and you feel like you can jump off a building and fly, which is like been like amazing.
It's amazing.
Yeah, very, very blessed to have that. It's like the ultimate family hack, and I'm taking that with my children as well. Taking that towards my children as well. But honestly, a lot of the mentors came from my family relationships, my father's relationships, which again gives me like a huge leg up. I mean,
of course.
I can't discount that.
So let's talk about what would your advice to be somebody that doesn't have that?
Same advice that I would give on the residential side, which I didn't have. You know, I had zero mentorship on the residential side, and I was able to grow a decent team, and really more so over the last 12 months. I feel like I've accelerated more in the last 12 months than I had 4 years, probably 4 years together on a mindset growth perspective. To find mentors, it's like anything else. You have to surround yourself, force yourself to be in rooms with people that you could potentially bond with. Okay. Right? And it may take 4 or 5 times to do that. And maybe it's going to masterminds. Maybe it's going to a happy hour event and just engulfing yourself into this world. And
so like, I'm a young pup agent that joined your team. Shahin, I love what you're doing. Give me the first step. What would you be telling somebody like that?
Well, I'd say, hey, we need to save some money.
Yep.
Right? We need some cash to save so we can buy something. It doesn't matter what it is. And if you don't own your own home yet, that's honestly the biggest gateway. It's the easiest gateway, really. Because there's so many residential loan programs out there to just get your foot into the door to own a house. Right? And that's just a really good way to also test your tolerance level, your risk tolerance level. So that's what we do. We try to get you to purchase a home.
So we talked a little bit about kind of like growing your network, strategies around kind of acquisitions. You have kind of a thesis. Let's talk about some exit strategies here. So like very capital intensive is kind of where you're at, especially if you're in kind of up and coming prime, even though maybe you catch it on the early end.
Yeah.
I mean, you know, if it's not a huge cash flow asset, but because land play is oftentimes may or may not have cash flow, right? So like we're holding till we see that pop. Are we refining and holding beyond that? Are we selling and exiting? What are you doing about tax implications?
Yeah.
You're redeploying? I know it's a loaded question.
No, it's a great question. Initially, in my initial growth phase, it was let's buy something, hold it for 2 years. And normally I'm getting into neighborhoods where I can tell in 2 years I can move that product. Move that asset. And normally we're trading that asset at 100% in 2 years. My IRR is 40+%. That's
great.
For me, it's pretty good.
Yeah, that's awesome.
And so I've recognized that, and this is, again, going back to the hack I have of looking at MLS every morning and every night.
Simple. Sometimes it's that simple.
Honestly, it's that simple.
Yeah.
Like, where'd you find this deal? I'm like, well, I look at MLS every single day.
That's your bat signal, right? It's like, okay, I see a trend. I'm
Well,
It's
and then you
bleeping
see,
at me every morning.
or you see an ignorant seller or ignorant agent who
Right.
who lists the property in an area that has already grown and they may not recognize that.
Yep.
Right? Maybe it's an out-of-state seller, and I'm like, that doesn't make any sense. Let me buy that right now.
I mean, look, side shout out to the good agents out there
For
that
sure.
do their sellers a service.
Yeah.
That, I mean, just quick promo, get a good realtor that knows what they're doing.
Holy crap.
Because equity is lost or left on the table for sellers, maybe even buyers, when you just have bad representation.
There
right?
is, our job as agents is a fiduciary job.
Yep.
At the end of the day, that's exactly what it is.
Absolutely.
Right? And I can't tell you, we do 200 to 300 transactions a year on the residential side. And I can't tell you how many times I think, man, I feel really bad for this. I feel really bad for the other party.
Yep.
Because their agent is doing them a disservice.
Absolutely.
For a variety of reasons. So yeah, I mean, it's if you want to go to the best doctors, right?
Yes,
you want to go to the
absolutely.
best dentist. You want to go to the best. I feel like a lot of people discount the level of quality you can get from
because
a really
there's
good
a
realtor.
wave, and not to veer off, but like there's a wave of commoditization
For
of
sure.
our industry, right?
Yeah.
And I don't think it's done. I think we're at the beginning, right? And I think there'll be buyers and sellers that want to transact in a simplistic, like iPhone experience way, and there's going to be a lane for that,
Yeah.
right? There's going to be a lane for like the white glove,
For sure.
like hands-on service, right? So like I not to I don't want to get too far
Yeah.
down that road, but like our industry is evolving.
Oh, it's
right?
beautiful. Yeah, I love it.
Daily, weekly, right?
Yeah.
Not to mention all the latest tech that's even rolled out as early or as most recent as like these freaking VR glasses that just dropped, right?
Yeah.
Like that's going to change things.
Oh, it'd be
right?
great.
So anyway, so let's kind of get back to it. So give me a horror story. We all have them,
Yeah.
and they get crazy, right?
Yeah, on an investment.
On one of the investments.
The horror story that I've recognized typically starts and ends with having a partner that ends up not being the best partner.
Okay, partnerships.
Partnerships.
That's big.
Is big, and actually in all my businesses, I've learned that the make or break is who your partners are. Do they have the same core values as you outside of financial? Do they
Yes.
have the same moral values of you?
Correct.
Outside of the deal? A lot of stuff like that is a big, big game changer. But starting out, whether I'm starting a gym and I need a partner, or I'm starting a candle company, or I'm starting a bakery, or investing in real estate, a lot of times we're like, hey, I'll be 50%, you be 50%, and we'll share work.
Right.
It doesn't work that way.
It's very hard.
Very hard for that to happen. And
Sometimes it's perceived, right? Like,
Exactly.
hey, I'm 50%, but I'm doing 20%.
Yes.
But I'm still 50%, right?
Right.
Like that's a common.
And our journeys may be different, right?
Yeah.
Like today we're at the same spot, but in a year from now, you may have your first child, and I'm still not at a child's.
Correct.
My risk tolerance is very different.
Yeah. Your perspective and your focus is completely different.
I've learned, and I'll tell this all day, every day to anyone who ever wants to start a business, just shoot me a message, send me a DM or something, and I'll give you the framework of stuff not to do.
Yeah.
But we're doing that because we feel like we have to have that partner to get us to the next step. And the reality is you don't. You just need the right people to connect the dots.
So I'm going to unpack that a little bit more. So clearly there's a skeleton in the closet of a challenging partnership.
Oh, for
somewhere
sure.
along the way.
Yeah, I mean, thankfully not anymore, but yeah, there's definitely been those in the past.
So what, in hindsight, clearly vetting, getting core values, kind of some stuff you just mentioned, but like if I'm somebody new considering a partnership, what's my checklist? How am I deciding this?
Only go in with somebody that you either know and are super comfortable with to give your money to or invest with, or someone that you trust times a million,
Yep.
who says this person is someone that you're going to be okay with.
Do you feel like it's important early on? Well, I'm just going to pretend real estate investment for a second, not to complicate things, right? So like everybody's put in a check together, like equal money. Is that a safeguard? Does that matter?
It's definitely a good baseline, right? If I'm going to put $5,000 in, you need to put $5,000 in as well. It's a good baseline.
To make things equal?
Yeah, to make things
At
equal.
least on that front?
I'll tell you, this goes against what I think a lot of people think, but if you're going to go into a partnership, someone in that partnership needs to have the final say.
Okay.
Because that boat needs to move.
Yes.
Whether it's moving forward in the right direction or backwards in the wrong direction.
Or you're jumping ship because it's sinking.
You have to let it move.
Yep.
Because a bad mistake will then give opportunities to reset its path. But if you're not going forward or back, you're not growing and you might as well be dying.
That's fair.
And
I love
so
that.
I'll tell people like, hey, and very, very, very few relationships that I have or investments I have where I'm not the final say.
Yeah.
And so if I'm in those, that
Type
speaks
A.
speaks high volume to the people that I trust that are in that final say.
And I absolutely I mean, this is kind of perfect segue, right? So like, I know you're a high velocity entrepreneur. Like I know that, right? And I, mutually surround myself with those kind of people, right? And I'm blessed to have you as a friend, right? So let's talk about like the common entrepreneurial dilemma of like just wanting to do it all, right? You own a gym, a brokerage, real estate acquisitions. I don't even know what else that you haven't even told me. I'm sure there's more.
There is a few more.
So how are we juggling this stuff? How are you keeping your head straight? How are you making sure that you execute well at each of them? Give me a little kind of insight into how all that works.
Over the last 3-4 years, it's shifted significantly because I now have 2 little girls, and they're the most
you have
important.
2 bosses,
yeah,
maybe
2
three.
bosses, 3, yeah,
Brooke,
my wife,
right, your wife.
So now that's shifted significantly. But I've always personal challenge for me was always, how can I hack myself even more? How can I become more efficient?
Okay.
How fast can I respond to an email without any errors in the future?
Are we talking delegation?
No, just personal.
Okay.
If an email comes in, or 5 emails come in, how fast can I execute efficiently and effectively on all 5 of those?
Okay.
And start and like gauge myself. I was constantly hacking myself, even to a point where an assistant would say, "Oh, an email just came in," and then she would say 2 seconds later, "Wait, how'd you already respond?"
Yep. Yeah.
Right. And it's with the attachments. It's with everything that needs to be. And I constantly I'm self-aware and trying to self-critique and improve myself perpetually.
Okay.
Right.
So is that you muscling through this stuff yourself?
Yes. Inefficient.
Is that effective?
At the stages of when I was doing it.
It's working, obviously. But
from 25 to 35, my age is 25 to 35, it's what I had to do.
Okay.
Right. At least what was available to me.
You could argue that's when we had the energy to do that.
Yeah, energy to do it. But it was what was available to me. It was available what was available to me, to the knowledge that I had. Now, knowing what I know now, I'd go back and redo it, and I would put myself with different mentors, plural mentors, and I would hack this thing a little bit earlier and faster and more efficiently. But I used to have the mindset where I know this may not be the most efficient route, but I know that the route I'm going is going to get through, and it'll break through. And when it breaks through, I'll get that nest egg that I need to then fund my other steps. But I'm a high operator. I can do multiple things. How my brain operates, and I think a lot of entrepreneurs think this, is there's literally, like even right now, there's like bubbles that are floating, and it's boom, pop, boom, pop, boom, pop. And I think some of us have ADHD, maybe some sort of that because of it, because we're constantly, even a conversation with you, I'm still conscious of
things are still moving.
The things that are moving above me.
And we know, with all due respect to everyone, like entrepreneurs are wired a little differently.
Yeah, for sure.
DNA is something a little,
100%.
Better or worse, right?
Yeah.
But like something's just different, right?
Well, we're also never happy, and I think that's a whole different story.
But so let's go tactically again. Like I want to kind of deep dive. So how do you functionally manage a gym, manage a brokerage, manage your real estate investing?
Yeah.
Like what does the day-to-day feel like to be able to run all that?
Honestly, it's very simple because it's just like anything else you do at your home. It's the same way where someone says, I have no time. I have no time to do what I need to do, and it's just go to the grocery store.
Okay.
Right? Like all you need to do today is go to the grocery store. You have no time to do that. Or I'd love to go to the gym, but I have no time to do that.
Right.
And then until we start hacking our own time, right? Yep. So not just on a day, not just on a day per 24-hour perspective, but on an hour perspective, then on a 15-minute perspective, and not even down to a 60-second perspective.
Yeah.
Okay, what I'm about to do, is it going to take me 60 seconds or not? Okay, and then what's the efficiency level of me doing that, and what's effective of that? And so once you can hack yourself to a second, then to a minute, then to 15-minute blocks, then everything becomes a little bit easier, right? It's like if I can dedicate X amount to this, and then put wheels into motion, and then of course now it's having the right people in place to move the pedal forward.
So let's move that conversation a little further. So like I think clearly you've done analysis of like what's my time worth, which most entrepreneurs start with, right? Even leadership, right?
I think most entrepreneurs get there.
Yeah. Like okay, I want to make X. There's 2,000 hours of productivity a year, right? In terms of work hours, that's what my time is worth.
Right.
and like you've heard a lot of entrepreneurs say this, like anything below that threshold, I'm going to delegate, elevate, hire,
Right.
whatever I need to do to get it out of my life, right? So have you done some versions of that for yourself? Because you're very hands-on. Like I know that. Like
Yes.
it is true what he's saying. Like when I email you, there's like almost instant,
Yeah.
right? Almost, right?
Yeah. Sometimes it goes away. But what you're talking about, I finally started doing over the last 3 years.
Okay.
And that's been triggered because of me having my daughters.
Okay. Yeah.
I tell people this, the number one hack to a growth mindset,
Yep.
and I'm talking about like shut the door. This is a completely different growth mindset that I've ever had, different perspective. I'm now wearing my VR glasses, my 3D VR glasses, is having children.
Yeah.
Now, having an amazing partner for me, my wife, having that has been fantastic as well. But man, for me, was having kids, game changer.
Forces efficiency with time, right? Because there's you now probably condensed to 5 hours of effectiveness.
Valuing my time has never been more valuable than right now.
Right now, absolutely. And then, so do you have managers for the gym? Do you have managers for the brokerage?
So I've now identified, okay, I have this thing, and I don't know why it's like this, but it's almost like every 2 years on the dot, a new business starts for me.
Yeah.
A new challenge starts for me.
It's entrepreneurs.
It's like 2 years almost on the dot. And so my goal is I'm going to start this. And by the way, I'm anti-business plans. It's a whole different thing. Don't ever do a business plan, ever.
I'm gonna bleep that out. No, I'm just kidding.
but
No, you're absolutely right, right? Like
business plan just tells you exactly what not to do.
There's a framework, but like writing a 30-pager, nobody ever even goes back to it. Right?
Never do a business plan. But for me, it's like, okay, I've got an idea. I want to dedicate this as my hobby for 2 years to get it to a point where I can be hands off of it.
Yep.
Right? And I'm going to maximize it as fast as I possibly can. And it's a bit of a game, and it's addicting for me, and I love doing it, and it happens. And so with the gym that I have, we were top 4 gym in the CrossFit gym in the country, biggest one in Texas. We were sponsored by Reebok.
That's awesome.
Reebok launched their first ever weightlifting specific shoe out of this gym here in Houston.
So cool.
We had people moving. One guy moved from Brazil, unannounced, moved it from Brazil and to be a coach and trainer at my gym for 2 years. Stuff like that. It was amazing. And it got to a point where I knew the gym was never going to be the number one money maker for me. It was really a passion project. But I did it because, one, it made me feel better.
Yep.
It put me around people that were...
You surround yourself with healthy people.
Healthy people with healthy mindsets. I had an opportunity to meet people I've never met before in my life, which also, by the way, fed my residential real estate.
Yeah. That's a great lead source.
It was a great lead source for quite some time. And my residential real estate was always seed money for me to utilize as capital so I can do investments. Within my investments then could pay me back as residual income. So then I could eventually retire at 40 or 50 or whatever that magic number ends up being. So that master plan has always been in place. So I knew that even if the gym never made me money, it was always a good lead source, marketing source to help fund my investments in the future for me to be able to sit back with my kids.
I love that. And the gym is a real estate play.
And the gym is a real estate play, which
own the real estate that the gym is in.
By the way, the gym started out of a necessity because the market had crashed in 2008, 2009. I was sitting on my thumbs. I was trying to figure out a way to make any kind of money at all. I was literally eating spaghetti every night. I had a roommate. I was so broke. I borrowed $5,000 from my roommate, who was a med student, he got that money from a scholarship loan that he applied for.
Oh, wow.
So I was so broke that I was borrowing money from my roommate who was a student.
That's awesome.
And so from that,
jump-started the gym.
Jump-started the gym because I was like, look, I need to do something. I was doing these P90X videos and Insanity videos, and through a happenstance met this great guy who was doing CrossFit style stuff. His name is Tate. He had a great gym in Katy. And then I was like, you know what? Like, let's invite some friends. And then from a couple friends turned into this massive thing, which then kind of spun on more relationships.
I love it. I think you touched a little bit on this just now. What's the end game?
The end game is to be able to dictate where my time goes, not being forced to push my time somewhere.
Got it.
And what I mean by that is if I choose to spend time investing in a real estate deal or showing a house or doing an open house, or if I choose to want to spend my time with my children at home or in Costa Rica, I have that choice.
I love that. So today we're laying groundwork, continue to lay groundwork.
To get to
that outcome.
No, I've been laying this groundwork
From the very beginning.
From day one.
Did you like
this whole thing? I graduated college. My good college friends know this. I said, when I graduate college, within 7 to 10 years, I want $1 million.
Okay.
Okay. I got it
24 months later.
No, I wish. I got it I hit my $1 million mark on a single transaction. I got it on year 11.
Wow.
Okay. So my goal was 7 to 10 years. I want to make $1 million.
That's awesome.
Now, I didn't know if it was going to be $1 million on one transaction or if I had $1 million. All I knew is I put it in my head, no matter what happens, I want to make $1 million.
That's awesome.
Made it, and I have a check. I have a check that I got from the title company. It's framed. My wife framed it for me. And it's the check for $1 million and like 88 cents or something like that.
Awesome.
But that was my number one goal. Now, it was my number one goal because I've always literally said, dude, I don't want to work. I want to retire at 40.
Yeah.
I want to choose. By the time I hit 40, I want to retire.
Yep.
And honestly, I'm not that far away from that.
That's
because
awesome.
Every action I take is with the mindset of, if I'm going to spend this time to do this, is it going to reach me to my end goal of retiring? And I've been doing that since I've been 25.
And, just kind of knowing you and knowing kind of how our families work, it's not like retirement is just a philosophy,
yes.
right? It's like now you're just wanting to work because you're not going to not work. I know you.
Yeah,
you're not going to not work.
But you get to choose what you're doing,
just,
right?
Yeah, it's your choice. You're not
right.
forced to work. You
right.
don't have to work. But now you're just show up and you want to do something exciting, a new development, a new,
right.
a new strategy, a new business idea, right? Whatever the case may be. I mean, it's not easy, right? It's I'm not trying to diminish how hard it is to get to these places.
For sure.
And we've had fair and unfair advantages. Some of it is earned. We worked our ways to these tables sometimes.
Listen, I can't tell you how many times someone's called or I've called somebody and they're like, your name's Shahin? Like, you speak English?
Right.
Right? So then how many people have not called me because my name was Shahin?
Absolutely.
Right? So, like, I'm not going to discount, like, I have a leg up on real estate investing because of my family background.
Absolutely.
1 million, in those relationships, 1,000,000%.
Right.
But there's also been some pushback because of my name and my culture
Absolutely.
And all that stuff, right?
And, I think at the end of the day, almost everybody is going to have some disadvantage.
For sure.
Right? So, like, we have versions of it. There's different versions
100%.
of it, right? It's kind of how you navigate. Obviously, it's a mindset of whether you even choose to let it hold you back.
It's like whatever.
Right? But in general, like, I mean, I think overcoming those, like, mission critical, and what I love about what you said is, like, I think you've just given yourselves these, like, targets, right? Like the $1 million check, right? Like, that was a target, and your entire mission for that decade was like, I am just going to get to that thing.
Yeah.
And then the new target showed up.
Dude, I mean, I'm telling you, like, people think that, like, I was born with a silver spoon in my mouth, and that's not the case.
It was
like,
gold.
It was gold spoon.
I'm just kidding.
Filled with oil. No, but the reality is, like, we were clipping coupons like everybody else growing up, right?
Yeah.
I saw my mom, my father work multiple jobs. Yeah. Like, it wasn't.
Well, and I think that's.
I went from borrowing money from my roommate to then getting $1 million check.
I was going to touch on that. Like, the borrowing from your roommate is a snapshot of, like, hey, despite. I mean, I'm assuming at that point you're in college now.
No, like, this is out of college.
Out of college. Okay, out of college.
Yeah, I'm telling you, broke.
My point is that your family's probably doing okay at this point, but you're still mentally, functionally broke, right?
Right.
Broke. Like, I'm sure there could have been a couple phone calls, but you said, hey, I'm going to take the harder path here. I'm going to have an uncomfortable conversation with my roommate. I'm going to put myself in this weird personal debt thing to bet on myself. Right. And that was not easy.
Right.
Like, it's funny, like, I have I've done the same thing, right? I borrowed from old college buddies, right? And I'm like, hey, this is what I got to do. Like, because I'm not asking my parents. I'm not doing that route, right?
Yeah.
And so, like, it was part of, like, the work ethic you saw from your family, your dad, every single day. Like, that gets, like, kind of wired into you. But then it's like the decisions you make from there, right? Like, there's easy outs or there's, like, challenging, uncomfortable ones.
Honestly,
right?
like, the reality of the fact is like, all of our entrepreneurial success isn't hard. It's actually, like, very simple. It's just doing the work.
Yeah.
Like, that
is hard.
Well, for some people, it's, for whatever reason, it's hard.
Committing to it, like, mentally.
Yes.
In here, right? When, especially in this day and age, and, we've got young kids around the same age, so, like, it's going to get hard. The distractions are everywhere. They're amplified.
Right.
The entire world is at your fingertips
at
any given moment. And you could just go off in space for hours.
I struggle with this because I have this mentality. I'm like, guys, just do it.
Yes.
Like, just make it happen.
Yeah.
And it's easier for me to say that because I've done it. And I know some people have that roadblock and they just can't do it for whatever reason. But it's very simple. You just do one thing more often than your competition.
Correct.
Like, I know in residential real estate, I know that as long as I outwork the person next to me, I'm gonna win. So how do you outwork somebody in residential real estate, especially if you're just getting started? Okay, let's think about this. Well, I don't have any leads. I don't have any buyers. I don't have any sellers. Great. Well, could you do some open houses? Easy, right? How do you get open houses? You can call people like me or like yourself or whomever. Hey, can I do an open house for you? No problem. If you did, I guarantee you the average realtor, whether they're successful or not, probably does maybe one open house a month, maybe 2 open houses a month.
Without a doubt.
Right?
Maybe. Without a doubt.
Right? So let's just give them the benefit of the doubt. Say 24 open houses a year. Okay? Let's just say they did 1 a week. Right? That's 48 open houses a year.
Right.
Okay, cool. How about this? Why are you not doing 2 open houses every Saturday, 2 open houses every Sunday? Well, I don't have the time, Shahin. Yes, you do. From 11 to 1, 3 to 5.
You're committed.
Right? And then what do you do from 9 to 11? You're showing buyers that you got. And what are you doing between these other times in the afternoon? You're showing buyers that you got, right? But from Saturday and Sunday, every Saturday and Sunday, you do 2, right? How many do you do in a month? 2, 4, what is it, 16, right? You do 16 in a month. You do that for 3 months in a row, 4 months in a row. You've already done more.
Correct.
2x, 3x, 4x than what the average realtor have done.
Of agents.
Okay, so you're telling me if you did 50 open houses in 2 months or 3 months that you can't get 2 or 3 buyers from that?
Correct. But execution.
But no one wants to do it.
Putting in the work, right?
But it's very simple.
And you know, it's funny. I'm gonna cross that over to real estate investing. Same thought process. We were just talking about it, right? Like developing a system for making offers, developing a system for acquisitions, developing a system for leads. Like, how do you like? There's, I mean, the entire internet has strategies and classes and like you can figure out like, hey, I want to buy single family rentals. I want to buy Airbnbs. I want to buy multifamily, whatever it is. There's like proven playbooks already out there, right? And I make this joke all the time. Like, I'm pretty sure, and I've not done it, and I probably should, you could probably Google the New England Patriots Super Bowl winning playbook. And it's probably out there on the internet somewhere, right? But the Texans and the Niners will not pick that up and they'll make their own, right? And I'm like, it's out there, but it's execution. Like, it doesn't matter. It's who it is, who's running it. Is it the right team? Is it the right mindset? Is it the right person? Right skill sets? Whatever, right? So anyways, I think that that's perfect. Like, you know, you've laid some crazy groundwork in terms of like your mission, which started with that $1 million check. Right? 100%. Now it's like, hey, retire by 40, 45, whatever the number is, right? Choose my time. Like, I control my time.
Right.
My time does no longer control me, right? And that's kind of sounds like the next ticket, that that next kind of objective. Give me a crystal ball of what you're seeing. You know, it's weird times, economic weird stuff going on. Like,
again, to a fault, I have the highest probably investment tolerance that anybody does. It doesn't mean that I haven't lost money on stuff, but I've definitely won more than I've lost. I think it's a great time to invest because scared money. Right? Scared money gives me opportunity to invest. What I mean by
sidelines.
There's a lot of people who are nervous about it. Just same way that I know a lot of seasoned investors who won't buy a slam dunk asset that's on a hard corner in a promising area because it's vacant.
Right.
I don't want the risk, Shahin. I'm like, I don't see the risk. Like, you've got $1 million sitting in your bank account doing nothing, or you could put it here and just see appreciation. Like, I don't understand the risk you have.
Right.
So I think it's the same thing. I've now, being 40, I've now been through 3 or 4 different ups and down cycles to now know that whatever goes down must come up.
Right.
And whatever goes up actually still ends up going up. Now, there may be a hiccup down, but the hiccup is typically long-term, always goes up. And usually whenever we see a down market, it's a V-curve bounce, right? So it comes down hard and goes up past where it was. So if I'm investing for the future, whether I'm I wish I started at 20, but if I'm at 20 years old or 30 years old, I'm investing knowing that I'm investing on a decade perspective is a whole different ballgame. I'll never forget doing a lease when I was 2-3 years out of college. I'm doing a lease, and we were doing a lease for 10 years on a commercial property. I was the assistant, right, to my father at this point. doing a lease. It was a 10-year lease. I remember telling my dad, oh my God, you want to do a 10-year lease? Like, that's so long from now. And he just laughed it off and said, well, it's a solid thing. I'm like, okay. Nowadays, I'm like, man, I've got a decade perfect. Like, a decade goes like this.
Right.
You blink and a decade's gone, and it's unreal, right? And you especially see that with our kids. In 3 years, my little baby goes from this to this. Like, it's unbelievable.
Right.
So I think if we change our mindset to think in decade perspectives, laying the groundwork and the seeds to get planted becomes a lot easier. Like, the amount of open houses I do when I first start out, or all I'm doing is I'm planting these seeds that in 2 years, 3 years, 4 years, 5 years are going to blossom, that I'll supersede everyone else around me.
Makes a ton of sense.
But
I love that.
We don't think that way as Americans. We don't think that way.
I love that. I love that. Give me some quick advice for a newbie wanting to get on the journey that you've been on.
Don't do business plans.
Love that.
And spend money.
Okay.
Like, just go buy something.
Okay. We're talking real estate.
Yeah, just go buy some sort of real estate. It doesn't even matter what it is. A vacant piece of land or whatever. If you've got to cut the grass yourself, go do it. Like, just go buy something. I say the same thing on the stock market too. I started investing in the stock market when I was in high school, as a freshman in high school. And what happens is, the second you buy a stock, whether it's 1 share or 1,000 shares, it doesn't matter. What are you going to start doing? You're starting now every day or every week, you're going to now pull up information about that company. Let's just say it's Apple. I own 1 share of Apple. Okay, well, you're going to start learning everything there is to know about Apple.
Right.
And why did it go up? Why did it go down? What's the reason for the stocks to go up and down? The same thing goes in real estate. Just buy one. Buying your first car was really scary. Buying your second, third, fourth car, not scary anymore. And you know what? Spend big money, as big as money, what you think is big money in real estate. Buying your first car, you thought buying a $20,000 car was a big deal. And it was.
Right.
Okay? The natural progression is from a $20,000 car, it's buying a $50,000 car. Oh my God, I never in a million years thought I'd buy a $50,000 car. Well, the natural progression from that is buying a $75,000. Oh my God, I can't believe I'd ever do, or $100,000. So here's my challenge to you. Put yourself in uncomfortable positions.
Right.
If you're buying that $50,000 car, could you maybe buy that $100,000 car? It puts pressure on you, but it puts pressure on you to perform to make up that money, right? It puts pressure on you to realize that, you know what? I do deserve that. I can afford that.
I'm going to package that for you. Continue to think bigger. Don't limit yourself with short.
Continue to put yourself in uncomfortable positions.
Love it.
Look, when I was buying a house, even myself, a seasoned real estate person, buying my personal home, I had given ourselves, my wife and I, we had decided on a budget. It was a comfortable budget.
Right.
The reason why I didn't go, let's just say it was $100,000. $100,000 budget to buy a house. Could I have gone to 200? Yeah, I just have never spent that kind of money on a house before. I just wasn't ready to do that.
Right.
Well, guess what? At the end of the day, I finally checked myself and said, no, I'm going to do this. So I bought a $200,000 house. Well, guess what? That $200,000 house then appreciated significantly more than that $100,000 house would have, right?
Yeah.
So I think it was even me, even as seasoned as I am, with the risk tolerance I have, it's putting yourself in uncomfortable positions consistently. When we got married, I told my wife the following, and I said, look, if I ever start losing my risk tolerance, please check me. My biggest fear was losing my risk tolerance, because my risk tolerance allowed me to be where I am. And I heard stories from so many friends and mentors who have children that are older than mine that said, yeah, I just don't do that type of investment anymore because X, Y, and Z. And I keep thinking, I'm like, well, you're not growing anymore. You're just stabilized, which is nothing wrong with that. And to a certain degree, I'm pulling back, I suppose. But I never wanted fearful money. I never wanted my tolerance to be scared to do a deal when I knew deep down the deal was a good purchase.
I love that. Love that. Shahin, this has been awesome. Always fun rapping with you. I think we could probably go for a couple more hours, but I appreciate you taking the time. This has been great.
Thank you.
The show notes will have all the stuff to get in touch with you. So if anybody ever wants to follow up and check in with Shahin, Shahin, Madison 5 Properties.
Yeah, man. Thanks.
Love you, brother. Thanks, man.
See ya.
Yep. Cheers.
Cheers.